Joanna, why don't we talk about a favorite topic of mine, which is the modernization of the bond market. Equities became largely electronically traded 20 years ago. You see down here on the floor. When I got here on the floor in 1997, there were 4,000 people around us. They traded 80% of the NYSE on the floor. Today, there's, I don't know, 200 something. They trade 15 to 20% of the, so big change. But a lot of bonds still trade over the counter. It's amazing to me. How much progress are we making on making the bond market more electronic? And do we want to make it more electronic? What's standing in the way of becoming more electronic? Just sort of update us.
It's been a slower transition for the fixed income markets to go more electronic and to modernize. What's really interesting about the intersection of that time in equities, so there was an intersection between ETFs and that time in equities. As they started to digitize on the exchanges, ETFs kind of came into play, and they actually worked really well together. I don't know, I'm sure you remember, but ETFs, when they traded on the New York Stock Exchange, were in a room somewhere else where they were trading electronically. So they had some of the first, beginnings of what a full electronic market could be for the New York Stock Exchange at the very least. And then all of the interaction of ETFs over that time. Bond ETFs are 20 years old today, and they trade the same way that some of the technologies in fixed income that are just starting to grow really fast. There's just portfolio trading, things where you're trading baskets of bonds in a customized way with clients. That's moving very fast. There's new trading platforms that are helping create more transparency to bond buyers, and it just sounds really familiar to the way ETFs had grown with the equity markets 20 years ago.
And does the sheer number, I always hear from the bond guys, well, there's too many CUSIPs, Bob. There's thousands and thousands and thousands, and it's hard to actually electronify that. Is that just a little bit of a canard, or is there any truth to that? What's impeding this from happening faster?
There are thousands of CUSIPs, but there's also a lot of technology that's been built in fixed income market making in the last 20 years where that is not as difficult as a problem to solve. You can easily imagine that. And then, I've got to put a shout out for the ETF markets themselves. They've been operating for 20 years. Fixed income ETF markets have weathered the GFC, they've weathered other different volatility events. And I think this last one in the pandemic really helped clients see what it's like to have something trade in a structured way, like in a portfolio,
even when the underlying
on a
products,
CUSIP by CUSIP basis, because you could really source liquidity when you needed it.
Even when the underlying products may be illiquid. The ETF
is trading, it's visible.
It's amazing how the market figures that out, isn't it? It's like it's magical almost.
And so I think that to some degree, I want to maybe plant the flag for ETFs, having all of these portfolios in existence and allowing the markets to figure it out over time, build the technology around them, and then for these products to have been tested through so many different events, the product needed to exist for people to interact with it. At Bond Blocks, we see the next generation of that happening. We think it's going to accelerate really quickly from here. And what we observe is there aren't enough fixed income ETFs. If you could imagine that, there's only about 15–70% of ETFs in the market are fixed income. And that's why we wanted to cut it all up into very, very granular pieces so people could exchange all that risk and we can see the next version of the modernization.